All right, everybody is talking about the 500 million debt that AMC as a company has decided to issue in order to refinance the long-term debt, of overall $500 billion. So in this video, I'm going to go over a few details in order to kind of clarify this whole situation so everybody can be on the exact same page and know exactly what is at stake and how does it interfere, how does it impact with the short squeeze or the future trading session when it comes to AMC stock. So first off, just look at the share price action today, because again, this is another clear illustration of how what's the problem here. Look, market went up today. All right, market for the fourth time since Friday are up big time, and you can see a clear recovery starting to shape itself if you look at the S&P 500. But how come AMC is not part of that? Because AMC is also a big heavyweight stock in the Russell 2000. But here's the thing, the Russell 2000 is not going up when everything is almost 1% up. The Russell 2000 is down 1%. I mean, let's make a quick comparison with the Russell 2000 here. As you can see exactly the disconnect. And it will give you more insights of what is happening behind the scenes with AMC specifically. Look, today, the blue line is the S&P 500. So ultimately, ahead, you can see that here. The more the S&P 500 is going up, the deeper the Russell 2000 is going. If you take the last month, same story. S&P was down 9%. The Russell 2000 was down 15%. When it went up, the Russell 2000 is not following. It's not following. Why? Potentially because the hedges, the short sellers, are also continuing to double down, continue to do what shorts do. All right, in the small cap sector with the Russell 2000, because personally, I think besides AMC and the short squeeze, this is one of the sector that has the most potential on outperforming the other indexes this year, just because of the full recovery ahead of us. All right. Now, by shorting the Russell 2000, you can also make sure you continue to also deepen the dive into AMC, because the news, even the Motley Fool on AMC stock today was a positive article, because anytime you have a company announcing that they are supposed to refinance the loans, it's a good sign. And usually, naturally the stock is supposed to go up. Look, AMC said in a press release that it plans to accumulate $500 million in a new loans to help fund the business. The cash will be used to pay off higher interest debt currently on the books, which is good news for the company's finances. It's a good news. It's a good push. Look, you cannot be in a position of refinancing if you don't have something to show for it. And the finances of the company has been better since the 100-year history of this company, AMC. So it is a good thing, but ultimately it doesn't translate into the share price. Why? Because, they know what is coming. So something to address here is the nature of this debt. Why? Because in any media outlet, and even if you go to the company press, release information on AMC website, I think there is something that is actually creating a lot of confusion. And that's precisely what I wanted to clarify. Wednesday, after the movie theater operator announced a private offering of $500 million of debt due 2029. Private is the term. Private offering. This is something that we need to highlight. The first lien senior secured notes are being offered for sale only to persons reasonably believed to be qualified institutional buyers. The company plans to use the proceeds to redeem its $500 million, 10.5% secured first lien notes due 2025. So ultimately, AMC is now trying to do what they were trying. They're trying to accomplish what they were trying to do back in summer last year, where they were planning on getting shareholders vote to go and sell some shares in order to raise $500 million. And that was a no for pretty much everyone, because it means share dilution. And in the midst of a squeeze, this is not a good thing, because ultimately you give more ammunition to the short sellers by doing what we don't want them to do, bring the share price down. All right, so it delays the squeeze. But now they're trying to do it another way, which is actually smart. Why? Because first off, it's a private offering, meaning it's not public, meaning it is only going to be bought by people that are qualified to be institutional buyers. So that's number one. So it's not a convertible as some people might think, because a convertible means I give you the loan now, and instead of you repaying me that money, ultimately I can convert that, I can transform that into a stock, and that potentially what will look like a sort of dilution. But I don't see anything here pointing out to the fact that it is a convertible note. All right, but ultimately this is a good thing. Why? Because it means paying off debt. Remember, one of the things that short sellers used to do, I mean, the short selling thesis, the short thesis that started in 2020 was that there is no future for this company. They are sitting on a ton of cash. There is no revenue. They're burning cash. But that is going away now. That is not relevant anymore. And that's why you have much more people buying the stock so far from the street and, of course, the retail investors. So that being said, what to expect next? I mean, I wouldn't be surprised if we see $14 by Friday, as they usually do around option closing dates, but it doesn't change anything. As a matter of fact, the future is even brighter now with such news, especially after Q4 2021 earnings that, were released early yesterday. So, I mean, personally, you already know, man. You already know. I don't need to tell you.